Good evening and welcome to the BizNews Briefing. Today is Tuesday, 10 February. I'm Patrick Kidd. In our top story tonight, South African private equity firm Harith General Partners has signed a deal to acquire FlySafair, but the transaction still needs regulatory approvals. Here's BizNews journalist Kerry Lanigan.
South Africa's aviation sector could be heading for a major ownership reset. Infrastructure investor Harith has signed a deal to acquire FlySafair, the country's biggest domestic airline. But the transaction still needs key regulatory sign-off before it can close. Harith and FlySafair say sale and purchase agreement is in place, with financial terms undisclosed. The deal is still subject to approvals from the Competition Commission and aviation regulators, including the Air Services Licensing Council. If approved, current shareholders are expected to exit. This is a significant moment in the market. FlySafair currently holds roughly 67% of domestic seat capacity. Harith has also indicated continuity, with FlySafair's existing leadership expected to remain in place. It also follows Harith's earlier unsuccessful attempt to buy into SAA via the Takatso consortium, which collapsed in 2024. And this deal lands against a long-running ownership dispute around FlySafair's structure, an issue SEME CEO Miles van der Molen has repeatedly raised with BizNews editor Alec Hogg.
Elon Musk was in the news very briefly, in the airline news anyway, for wanting to buy Ryanair. And then somebody told him, you can't, because Ryanair, which is Irish, is not for sale to a South African, American, Canadian. I think he's got three passports. And you cannot own that. Now, we have an Irish company in South Africa that you've been boxing with that has got 75% contravening South African ownership regulations, or so you claim, and they are the market leader, FlySafair. Can you give us an update on what's going on there?
I wish I could give you more. It's been very opaque. There was a finding by both councils, I guess about 18 months ago, that their ownership structure did contravene the Act. Then the councils were changed. It came to a natural end of its term and a completely different council was appointed. And since then, there's been very little information that's flowed. We are now 5 or 6 years into this ownership structure, which has been shown to be faulty. And again, I don't know of no meaningful challenge to that decision. There are rumors in the industry about various drives to find alternative buyers or shareholders. But at the moment, it just seems to be open-ended, which is a disappointing result because an unregulated industry is ultimately going to be an unhealthy industry. And to have one major player operating effectively to a separate rulebook is astounding.
Regulators previously found issues around compliance with foreign ownership limits, then imposed a sanction period to regularize. But an urgent interdict later paused license suspension while legal review continues. So even with the 100% South African buyer proposed, this does not automatically settle the licensing process. That will be assessed independently by the authorities, while competition approval also runs its course. For consumers and competitors, the key questions now are timing, regulatory conditions, and whether this finally closes one of the most contested chapters in South African aviation.
Speaking on the DA podcast yesterday, Public Works and Infrastructure Minister Dean Macpherson set out his ministry's 2026 priorities. Let's take a listen.
Well, Dean, I want to come to 2026. What is in store for your ministry? I know there's a lot of exciting stuff happening there. I read through your speech yesterday at the press club, and I was really excited to hear I think, the change in tone, from where you walked into this house that's burning with a bucket in your hand, and now how we can actually start looking forward to some of the exciting stuff happening in 2026.
Look, it's still smoldering, so the fire's not out.
That's not a bad sign.
But what we've also said is that you can't just do one thing without doing this. So we have to fix what's broken, and then we have to build at the same time. And so those two projects are underway. I would always like things to become and be done a lot faster. And I think that maybe those that work with me get frustrated that I want things to happen, quicker than they do. But we have some big exciting plans around the real estate portfolio this year. Nominally speaking, that portfolio is worth 148 billion rand, but we receive no investment against it. We do not leverage it, and we do not generate any income out of it.
Income.
It's mad. I mean, we are bigger than listed property portfolios.
Yeah. Wow.
And we don't even generate any income. So that is going to change in a big way this year, and we're really excited about that. And we're going to be disposing of thousands of properties this year as well, and get those into the hands of people who would really like to, whether they're nurses or police officers or teachers, give people opportunity where they live. And, we'll continue with the internal work that needs to be done, strengthening internal processes, appointing good staff, and cracking down where we need to. So, this is really a big year of turbocharging things for us. There's no time to sleep. There's no time to waste. We need to get on with it. And I think that what we announce in the next couple of weeks is going to, it's not only going to fundamentally change the department and how it operates, but I think that it is going to attract massive capital investment into this country. Because if you have this huge portfolio that's sitting dead, there are, companies all over the world that want to invest in that, upgrade that, develop that. And what do you do with that? You create jobs in the end. So, it just speaks to our priorities really nicely.
And people often say, but capital investment is such a long term. It just means it's going to billionaires and millionaires. But actually, really find that for us. I mean, what does that really mean for someone listening?
Well, I don't think that that's true. Pension funds, we're going to be targeting pension funds. These are people's, money that they've been putting away for retirement. If we generate great returns and dividends, we can contribute to their pension funds. Some developers in KZN have been doing that very, very successfully. And so, we like that idea. But, also, job creation is hugely important. Small businesses, big businesses, the more work that's out there in construction, the more opportunity there is for everyone. So, this is a pipeline event, and it's not just focused on, one particular sector of the economy.
Our partners at Bloomberg report that Alphabet is looking to raise about $15 billion from a US bond sale as big tech continues heavy AI infrastructure spending. Here's Caroline Hard on Bloomberg Open Interest.
It's a gigantic company. I guess no one's really worried about $15 billion of borrowing.
And at the same time, they're tapping the Swiss market and the sterling market. In fact, they're looking to sell a really rare 100-year sterling bond as well. So Alphabet is out there across every type of part of the debt market. Alphabet Infineon, the chip maker in Germany, just tapped the bond market very successfully over in Europe as well. You've just got hot on the heels of Oracle having sold $25 billion of debt at the beginning of last week. They got $129 billion of demand, a record set. You might be bracing for $400 billion of investment-grade debt coming to finance AI. That's what JP Morgan thinks we're going to be getting. Thus far, the pricing is enough to tempt people in, and everyone's saying, look, Bloomberg Intelligence is saying Google or Alphabet, the parent company, has a rock-solid AA credit rating. It is best in class in terms of its overall balance sheet. You don't need to worry here.
The idea of a 100-year bond for one of these hyperscalers is crazy to me because we don't even know what the next 3 years is going to look like, let alone 100 years. Maybe it's safe for Google to be doing this, for Alphabet to be doing this because of its cash and its balance sheet.
Yes.
But for the likes of Oracle, for these companies that are starting to go through some real cash burn, how are they still staying afloat? How are investors not completely revolting against them right now as they had been to end the last year?
I guess they pay enough. So it's enough that there is just this wall of demand that in the debt markets, yes, we've all been talking about equity. Everyone's been demanding so much of Oracle, Amazon, Alphabet, all of the hyperscalers and cloud providers equity. But the debt markets only get to tap in on these new issuances every year or so. Infineon's coming for the first time in a year. No wonder everyone wants to have a wall of opportunity to be buying in on this AI trade across the capital structure. And for now, it seems as though the price point, even though BI is saying, if you're looking at Alphabet, for example, they think you could maybe see the bond market, the yields come in about 40 basis points, but they're pricing them pretty on the nose for Alphabet. They obviously clearly got a syndicate issuance vibe from their banks that the demand is there. They don't have to suddenly go way over treasuries. You're looking at about 125 basis points at the longer end. But as the year progresses, maybe you start to see these companies have to pay up more. Maybe you see pressure on the issuance of older bonds. Remember, Oracle was actually taken to task by some of its bondholders. They were sued by saying, look, when you first tapped for 18 billion at the end of last year, you never made clear you were going to be coming time and time again. We didn't realize you were going to be financing this much in AI infrastructure, and they got a suing tap on their wrist, whether or not who wins out on that particular fight. But clearly Oracle then, when they issued last week, really were very clear on this is how we see our year going. This is the only time we're going to be tapping this year. And overall, you're starting to see companies having to be really transparent about the amount. No, I mean, they kitchen sinked it. It was a mic drop last week. 200 billion is how much Amazon's going to be spending. 185 billion is what Alphabet's going to be spending. They're being very clear with investors how much they need to get.
Like a soapy breakup scene, selling your car can be an emotional experience.
Just how dramatic was the car selling experience?
Not dramatic at all. I did my research and We Buy Cars was by far the best price.
Very not dramatic. But I like drama.
I was standing there watching my phone, waiting for the money to get in, and there it was.
Yes. Car, driving.
We Buy Cars, the easiest way to sell your car, by far.
I wouldn't mind a little more drama. Anybody bring me some tears?
And our wealth building tip of the day comes from mining guru Peter Major. He discussed Jubilee Metals Group, an AIM and JSE Altex listed metals company, saying its growing copper focus in Zambia makes it a business to keep an eye on.
Jubilee Metals Group. This is another small mining company listed on the Johannesburg Stock Exchange, and it's had a pretty good run in going towards the end of last year and primarily early this year. But it's still a long way from where it was in 2021. Is this one that you're looking at closely?
Yes, I am, Alec. Now, it has morphed into quite a different company. When it ran in 2020, it was making its money from PGMs. It was in Zambia. It was taking on copper properties, but it was a PGM producer out of tailings. Notwithstanding, it's sold off, I think, all of that now, PGM and chrome. It is all the way up to its neck in Zambia. But it's got copper mine, it's got processing plant, it's got tailings dam, I think 250,000 ton tailings dam, copper tailings dam, and it's got very good properties. It's got prospects that are known, and it's got some properties that we don't know what's on it. And Leon Koester is a very good operator, very experienced ex-Anglo-American platinum metallurgist. He's run this company many, many years. Colin Bird's involved. They know what they've got. I know a little bit about what they got, and I really like it. This is a pure Zambian company now, and that is elephant territory. And one of the pluses that Zambia has over South Africa is foreigners are not afraid to invest there. We've seen tens of billions of dollars go into Zambia and the DRC this millennium in the pursuit of copper mainly, but also looking for gold and other base metals. So this company ticks all my boxes. And I know look at this graph. It's just scary because it shot up so much literally the last 2 months. And I know it had a nice pullback on Friday, Saturday, Sunday, Monday, just passed. I think it fell all the way back to 93 cents. And I was just crying. I had no money. I don't know what it is today. I haven't even looked. I think it's around $1, but I believe this is a very good investment, Alec. And that means you're Warren Buffett 20% plus a year. Good team, good properties, good country, know what they're doing. They're already producing. There's almost no box unticked here. Good balance sheet.
That's been tonight's BizNews Briefing. I'm Patrick Kidd for BizNews.com. Thanks for watching, and we'll see you tomorrow.